Well, I suspect a lot of people got left at the station on Friday with that big move out of the daily cycle low. I still see people trying to call tops. I predicted weeks and months ago that this would happen. Every other day somebody's going to try and predict a top. That's what keeps this market rising, is shorts that just don't believe that the market can keep going up. They just keep getting stopped out. They have to keep covering. That keeps the market going. At some point here, people are going to start buying aggressively. They're getting left behind. I would say most people have missed this rally. And at some point, the pain just becomes too great, and everybody starts buying. They don't want to miss any more of the move, and we'll get a big, massive, parabolic blow-off bubble top. But we are just at the very beginning stage. We have just now broken out of the bull market channel, and this is only just the initial start of the bubble phase. Once the breakout occurs, the bubble can go a long way. And as I've been saying for weeks, we need a buying panic that's proportional to the selling panic that occurred in 2009. And that was one for the record books. So I would say that 99% of traders, analysts, and investors are just grossly underestimating how far this is going to go. They see an 8-year bull market. They think that it can't go up any further. And anybody that can take a step back and actually look at the market can see that it is going up further. And we've got all the signs now that the market is starting the vertical phase. They usually last 6 to 8 months. We're only just a little over a month into it. I warned that the market was going to move much faster between these 1,000-point levels. Previously, it took a long time for the Dow to move from 19 to 20,000, 20,000 to 21,000. You can see now we've gone from 22 to 23,000, and we didn't stop at 23,000 like we have at all these other round numbers, where the market would usually pull back and consolidate for a bit, even as much as several months before breaking through and then making the run to the next level. We didn't do that. We gapped through 23,000 and we're just continuing higher. Again, a lot of people viewing that gap as an exhaustion gap and trying to short, and then having to cover their shorts when it proved to be not an exhaustion gap but a breakaway gap. So I'll say it again. We are in the vertical phase. I've been telling everyone this was coming. I've tried to get people on board, holding their position, hold turkey, so that they can actually profit from this move. Very few people have listened to me, and most everybody is just they continue to try and pick a top in this market. We've got that same channel breakout here in the NASDAQ. This is actually the NASDAQ 100, but same principle. We've got that same channel breakout. Everyone knows that for over a year now I've been saying 10,000 is going to be a piece of cake in the NASDAQ, and by that I mean the NASDAQ composite. But 10,000 is going to be a piece of cake, and 20,000 isn't out of the question when we get the really nutty ending phase of a bubble. When we get to 10,000, it's only going to be 100% from that point to get to 20,000. And during a final bubble phase, most markets will rally at least 100% during those final 6 to 8 months. So when we get to 10,000, it's not that big of a stretch to get from 10,000 to 20,000. The oil market, when it had its bubble phase back in 2008, went up over 200% during that final bubble phase. Here I've shortened the chart just a little bit. You can see here we've This is the bull market channel trend line here. You can see we bumped up against it multiple times early in the year. Then we broke out above it, came back down to test it in July, and now we're starting to move more aggressively above the channel. We had about a 2.5 month consolidation right in here. Here, I'll mark it here with the rectangle. So you can see here the Nasdaq came up and just kind of churned in this box for about 2.5 months. Then we broke out of it early in October. Remember, this is when everybody was calling for an October crash. The market has done the exact opposite. And then the daily cycle low, the move down into the daily cycle low, which I keep warning people, vertical markets don't give people many chances to enter. They don't tend to pull back very far. The move into the daily cycle low in the S&P and the Dow was almost not even visible. In the Nasdaq, it came down just far enough to test this breakout level, and then of course on Friday we got confirmation that the daily cycle did indeed bottom on Wednesday. We're now on day 2. I still see people trying to short the market. They're trying to find excuses for why this is not valid, why it's going to reverse. Folks, we are on day 2 of a new daily cycle. Stock market daily cycles don't top on day 2. During the advancing phase of an intermediate cycle, which we are in and which we are going to continue to be in until at least until the end of the year, don't usually top until day 30 or later, and this daily cycle here, especially in the S&P, didn't top until after day 40. So it's just irrational to expect this daily cycle to top on day 2. This is a valid move on earnings. This was triggered by Microsoft, Amazon, and Google, I believe it was, earnings. And this is day 2 of a new daily cycle, so this is not going to reverse. We may pull back a little bit Monday from a little profit taking here, but we're not going to go back down and drop below this daily cycle low. Day 2 is just way too early for a daily cycle to top in the advancing phase of an intermediate cycle. It's too early for a cycle to top during the declining phase of an intermediate cycle. Even if the intermediate cycle was ready to go into decline, you would still see this daily cycle rally for a minimum of 10 to 15 days before topping. So everyone that's trying to call a top every other day, they're going to continue to be wrong over and over and over. I've warned again that the vertical phase of a bull market, it has to start in the fall, because the fall is the strongest part of the year for the market. You've got holiday buying season, so a vertical phase would have to start in October, and that's September or October, and that's when it started in 2000 as well. Actually, in '99, it started in October of '99, because the vertical phase has to get a boost from that positive seasonality in late in the year, from October to the Santa Claus rally into the end of December. A vertical phase has to begin during the fall of a year. So it either had to begin in the fall of 2017 or it has to begin in the fall of 2018. Clearly it is starting in the fall of 2018, and like I said, they tend to run 6 to 8 months. So this isn't going to be over until probably late in the spring of 2018 at the earliest. So you've got to ignore these people that keep trying to call a top every other day. This is not going to be over until we get just a manic buying event proportional to the selling event that occurred at the bottom in 2009.